video, we're going to take a look at the conclusion of the worksheet that we prepared in the previous video and how we can use this to prepare financial statements. So first of all, here is the solution to the worksheet that we did previously. And what I want you to take a careful look at is the ending balances for each of the accounts. Cash, 3,000, accounts receivable, 2,000. On over to the last three columns, which are our owner's equity accounts, 7,000, 10,000, negative 6,000 for expenses. And then also look at the individual accounts or individual items within the revenue and expenses, and then the $2,000 drawing over here. And we're going to see how we use those items on the financial statements. So here are our financial statements for Newcomb Company, and there's three that we're going to look at. The income statement, which is first, statement of owner's equity, and then finally the balance sheet. And what we'll see is how these flow into each other. First of all, the basic formula for our income statement is revenue minus expenses equals net income, which is also known as profit. All these items came off of the last two columns of our worksheet and were itemized there with descriptions. And we can see that we list the individual expenses over here, total them to one number over here, so that we have a nice clean column on the right hand side and then more detail over to the left. Also note the headings for income statements will show, and financial statements in general will show the company name, the type of statement, and then the time period that we're looking at. We're looking at a year ending December 31st in this situation. Okay, the next statement we want to look at is statement of owner's equity, and it's summarizing the activity in the final three columns of our worksheet. So it's looking at what was contributed to the company during the year by the owner, or what was the previous balance that was carrying over. And in this case, it was the first year of operation. Todd contributed $9,000, and we could see that on the worksheet. And then our net income flows down from our net income statement. This is increasing our owner's equity. And then Todd had taken a drawing out of the company for $2,000, so that's going to reduce our owner's equity. What we see is 9,000 plus the 2,000 net difference between net income and withdrawals. We end up with an ending balance for Todd Newcomb's capital account of $11,000, and this will flow down into our balance sheet. Now our balance sheet is best thought of as a snapshot, a photograph of where a company is at a certain point in time. With this particular company, we're looking at December 31st. What did this company own? What did it owe other people? What was the remaining equity for the owners? So this is actually a very simple calculation here. It is the accounting equation. What are the total assets? And these are the bottom line totals from the columns in the worksheet. And here's the total assets. We saw this total at the bottom of the worksheet. Total assets were $12,000. And then we look at our liabilities. We only had one liability account, accounts payable. And then finally, we had calculated the sum of the three final columns as owner's equity up in our statement of owner's equity. That flows down here. And we make our final calculation, testing to see if our total assets of $12,000 equals liabilities plus owner's equity of $12,000, and our balance sheet balances. That is a really important step in a balance sheet. Do the assets equal the liabilities plus the owner's equity? And that's a really good indication when everything is in balance, that you don't have an account in the wrong order or if you've misadded something. So this is the conclusion of our videos for Chapter 1, and thank you for watching.